Click on any YouTube video and you'll see that everybody is saying that the economy is going to pot. We're heading to a recession and everything is just gonna be terrible. And here in the Boise housing market, people are saying that we should expect to see price cuts of 20, 30, maybe even 40% in the coming months. I disagree. I don't think we're gonna see a significant decline in house prices here in the Boise housing market, and let me explain. The first thing that people like to know is that the housing market is cooling, and this in fact is the case. The total volume is down. We're selling less homes overall here in Boise. We're seeing more price reductions and certainly less showings overall than we've been used to in the past several months. Now, all of this is true, but it's not the same as a collapsing market. What it simply means is that the total volume of sales is down. We're doing less transactions now than we were several months ago, but that doesn't mean that overall prices are crumbling. You still can't find a 3 to 1,300 square foot starter home in Boise for less than $400,000. So a distinction should be made between a cooling housing market and a collapsing housing market. Right now the market is cooling down, but it's not collapsing. Number two, people like to point out that inventory is up. And this is true as well. In May, we had about 166% more homes for sale than we did the year before. 2 weeks ago, there were 2,800 homes for sale in Ada County, compared to only about 895 in February. So that's a threefold increase in about 4 months. And this is true across the United States as well. Definitely seeing more homes listed across the nation. And this is actually causing some people to panic. Listen to what this guy has to say.
Inventory, active listing in January to February, it goes down. February to March, pretty even. March to April, about flat. April to May, boom. May to June, boom. 18.7% year over year. This data increasing is the scariest thing for realtors, and it's the best thing for buyers.
Now, while it may be true that we are seeing more homes listed in the United States, look again at the numbers that he is pointing to. Just this past June, there were 620,000 listings in the United States, but look at where that number was in 2018 and 2019. At that point, 2-3 years ago, there were 1.2 million homes for sale, and in June of 2020, about 1 million. So even though inventory has definitely gone up over the past several months, we're still about half of where we were at 2 years ago before the pandemic began. And when it comes to Boise specifically, I think we're about to where we were before the pandemic began. Again, just a couple weeks ago in June of 2022, we had 2,800 listings in Ada County. That's about where that number was in November of 2019. So the point is, we're not off the charts by any means. We're not in an unusual territory. If anything, we're back to where we started before the pandemic began. So yes, inventory is up both locally and nationally, but it's not crazy. And that's why I agree with what this guy is saying.
Prices are not going to go down. Some of you are saying, well, I'm going to wait for prices to come down. You're not going to get them.
Yeah.
They're not coming down.
Yeah.
Okay. They're going to go up slower, but they're not going to go down.
Number three, people like to point to the fact that interest rates are rising, and indeed they are. They certainly are rising, about 3% actually over the past 6 months. But here's the argument. They say that interest rates are rising, and this will lead to less people buying, which is what we've seen in the past couple months, which then means that prices will drop. But that last little bit isn't necessarily true. Higher interest rates doesn't automatically mean a crashing housing market. And let me illustrate that by pointing to some numbers from the 1980s. In the 1980s, you probably know the mortgage rate, the interest rate for mortgages was about 16, 17, 18%, which is the highest that they ever were in all of the history of housing. But the housing market didn't crash then. Here's a graph that I found of the median sales price for homes across the United States. And look at where that line is throughout the 1980s. When interest rates went from 12, 13, 14, up to 18%, the median house price continued to rise across the United States. So the interest rate didn't actually affect the price of homes that were selling at that time. Now, yes, there were less homes that were sold. Volume was down. People were sitting on the sidelines and not wanting to buy because they had less money. But the house prices stayed pretty much the same. And I think that's what we're gonna see here as well. And before I move on, if you think this video has been valuable and you'd like to see more content like this, hit the subscribe button and the bell. With so many realtors joining YouTube recently, this is the best way that we can stay connected and not get lost in the YouTube world. Here's what I think would need to happen in order for prices to plummet here in Boise, Idaho. Number one, we'd have to see an oversupply or a lot of foreclosures in the market like we saw back in 2008. In fact, that's what did lead to the crash back in 2008. We were simply inundated with inventory on the market, and that led to significant price drops, but that's not the case now. Now there are basically no foreclosures. And the reason is that people today have much more equity in their homes than they did back in 2008. And that's thanks to this huge increase in prices that we've seen over the past 2-3 years. So if people get into financial trouble, most people are not going to foreclose on their home. What they'll do is they'll simply sell their home and get the equity and pay off the mortgage that they owe. Another factor that leads me to believe that we're not gonna see a massive wave of foreclosures like we saw back in 2008 is the lending standards are much more stringent today than they were back in 2008. Now I know you keep hearing that, but that actually is the case. I've actually had several clients not get pre-approved for a loan over the past several months. Lenders are taking these lending standards very seriously, and for some that means that they're simply not able to get pre-approved. Look at this chart that I found as well. In 2021, just this past year, there was about $75 billion in loans given to people with a low credit score. But look at where that number is compared to the number in 2007 and the years leading up to the crash in 2008. 2007, $325 billion in loans. 2006, about $375 billion in loans given to people with poor credit. That is simply not the case today. Lenders are giving money to people who can afford to pay them back, and I think that is going to save us from seeing a wave of foreclosures like we saw back in 2008. And then another chart I want you to look at is this one here that indicates the supply of homes that we have on the market compared to the supply of homes that we had in 2006, 7, and 8. Again, the numbers are not even comparable. Last year, on average, we had about 1.8 months of supply on the market across the United States. Look at where that number is in 2010, 2009, 2008. It's about 9 months, 10 months worth of supply. So we're nowhere near where we were back in 2006. But you might say we're seeing much more inventory over the past several months. Okay, so let's even double that number. Let's say in 2022, the number comes back at 3.6 months worth of supply. That's still 1/3 less than the total supply that we had back in 2008 and 2007. The second thing that would have to happen in order for the housing market to crash is that we would have to see a lot less people that are interested in living in Boise, Idaho. Now, I don't think that's the case at all. Even though we've had less volume in sales overall, people still are interested in moving here. I'm still getting texts and emails from people like you who are reaching out to me from YouTube and other places and are interested in moving here. Now, some of these people, granted, are still testing the waters. I've had a few people last week, they're saying, maybe 6 months or maybe a year from now I'm interested in moving, but there's still lots of interest. All of the people who are moving here are moving from Washington, Oregon, and California. And none of them are moving here because they want to get a higher paying job. None of them are moving here because they want to find cheaper housing. Why is everybody moving to Boise, Idaho? Because they want to get away from the liberal politics of those 3 western states. And let me tell you something. The politics in those states is not changing anytime soon. And so people are going to continue to want to move to a red state like Idaho, which, like I've said in all of my videos, has an amazing economy. Just this past fiscal year, we came in at a surplus of $1.3 billion, and that's on the heels of a $1.9 billion surplus last year. And then the third thing that would need to happen in order for the housing market to crash here in Boise is everybody would need to suddenly panic. everybody would need to suddenly sell their home, and that would drive prices down. And in essence, basically that means we would need to flood the housing market with homes like we saw back in 2008 with the foreclosure crisis. But that's not a problem that I anticipate here. There are plenty of buyers standing in line who would love to snatch up a home if prices were to dip a little bit. Now, with all of this in mind, let me give you 3 reasons why I think that this might actually be a very good time to buy a home here in Boise, Idaho. Number 1, now is the time to get a deal. People are kind of freaking out a bit, and people have speculated as to what their house is worth, and now they're realizing, oh, actually, it's not worth what we thought it was worth, and so people are dropping their prices. I've seen homes go for $25,000, $50,000 less than list price, and that's not because house prices are dropping overall and we're seeing significant declines. It's simply people had speculated that the trajectory of the market is going in this direction, and so they would list their house at this price, but then they realized the market has flattened out, and so they've had to drop their price to match the trajectory of the housing market. The point is, nobody is selling their house at a loss here in Boise. Nobody's underwater. House prices haven't dropped so significantly that everything is in a flat downward spin. It's simply that people's projections were too high, and now they have to correct that to match the current market conditions. Number 2, you can be much more picky. So this might be a good time for you to buy. 1 year ago, this was not the case at all. You basically took what you could get, and it was slim pickings for people who were trying to find a home. But for example, if you want a south-facing home rather than a north or a west-facing home, you can be picky. And number 3, you'll have much more time to think about the home before you have to pull the trigger. And this makes the buying process much less stressful. So with that in mind, this might actually be a good time for you to buy. Again, once the interest rates come down, I think we're gonna see a larger volume of sale once again hit the housing market here in Boise. Competition, I think, is gonna go back up, and at that point, I think it's gonna be more difficult to procure the home that you want. And like my lender friends always like to remind me, this doesn't have to be your forever loan. Once interest rates drop, you can always refinance and lower your monthly payment.